Good afternoon, and thanks for joining us for this webinar on community schools. My name is Bob Hinkle. I'm the Chief Deputy Auditor for Dave Yost. I'm joined today by Kelly Berger Davis, a Quality Assurance and Technical Specialist and a member of our Center for Audit Excellence. And Kelly will be sharing most of the information with you this afternoon. Today, and this webinar fulfills the training that Auditor Yost spoke of in August during his press conference on community school overpayments and callbacks by ODE and the related true-ups with sponsors, management companies, and vendors that may be required. During the webinar, we will discuss the process a school should go through and determining if there is an amount due or from a sponsor, management company, or vendor. We anticipate the webinar will last approximately 60 minutes, including the presentation and the questions and answer session at the end. Those questions posed by the participants. Questions should be posed throughout the webinar, and we have a team monitoring those questions, and we will answer as many as we can today. All questions will, and then all questions will be answered with the questions and the answers posted along with a copy of this webinar on the AOS website in the near future. I think with that, we're ready to begin. So join me in welcoming Kelly for the presentation. Kelly, thanks for being with us this afternoon.
Thank you, Bob. And thank you for all who are taking the time to attend this important webinar. Today, we're going to jump in. And first, I want to make sure and go over some background to make sure everybody understands the history of this situation before we get into what you need to do now to start correcting it. I also have some additional information I'd like to go over before we get into some example calculations. So why are these overpayments occurring? As discussed in Auditor Yost's letter to all community schools dated August 8th, and then his corresponding August 9th press conference and press release, community schools often have contracts that call for compensation to be based on a percentage of revenue received by the school. Factors often change community school foundation revenue after year end, and therefore a true-up and the compensation paid in many cases is required. Auditors will be testing for these true-ups beginning with the fiscal year 16 FTE adjustments, which we'll explain in more detail later in the webinar. Now note that this is not necessarily the same as your fiscal year 16 audit or your fiscal year 16 financial statements. Often it will be your fiscal year 17 audit and financial statements because most fiscal year 16 community school audits are already complete. We will expand on this later, but please take note that this affects more than just schools with clawbacks from ODE. This will likely apply to every community school. This is referring to any changes that affect funding or payments. So aside from the clawbacks, you also have the regular FTE adjustments that occur after each fiscal year end. So first, I want to explain some of the line items that make up the community school's monthly payments. These line items are going to be referred to throughout the rest of the presentation, so I want to make sure everybody first understands what I'm talking about. So these are available on ODE's website, and the first section is your normal state support that your school receives. The second section is additional aid items, such as facilities funding, graduation bonus, and third grade reading bonus. The next section is on transfers, if you have an ESC contract deduction, and then adjustments. This foundation settlement that I pulled was just the first one on ODE's website. So in this example, this school had a fiscal year 15, and this is because this is a June 16 settlement. They had a final number 2 fiscal year 15 audit adjustment, FTE adjustment. That is what that adjustment terminology stands for. The JV40 is just a code assigned by ODE that doesn't necessarily indicate anything except for the JV40 codes in this case were the fiscal year 15 final number 2 FTE adjustments. Some other examples of adjustments would be the College Credit Plus, the post-secondary. If you have a school that appealed your FTE review, you may have a settlement agreement or hearing payments. Those would all show up in the adjustment section. And then that gets you to the total payment before retirements. After that, you would have the retirement system deductions, which is the school's portion for their teachers and the school employees. The foundation settlement report shown on the last slide and the FTE adjustment reports that we referred to are available here at this link. On this link, there are all of the FTE adjustment reports. I just pulled a screenshot of fiscal year 16 because that's the year we're talking about here. So on the very first item on there, the community school payment reports, that's where you would find the foundation settlements that was on the last slide. If you jump down a couple, the FTE adjustments that I keep referring to, those are the 1, 2, 3, and 4 listed there. The FTE adjustments these are a result of FTEs changing. So if you would click on that first final FTE adjustment, it would take you to ODE's FTE adjustment report. So again, sticking with the first one on there as our example, this school had a fiscal year 16 final number 1 FTE adjustment of $37,000. This school chose to pay it back over 10 months, which you can see there in the last column. So their monthly adjustment was the $3,773.53. So again, remembering that these are always, the adjustments don't start until after the fiscal year is over. Since this is a fiscal year 16 adjustment, it would not show up until the 2017 fiscal year end settlement reports. So if you go to the next slide, you can see where that $3,773 final FTE adjustment for fiscal year 16, their final number 1, shows up there in the last column, with the annual amount for the whole year showing up there in the first column. You can also see on this one, this example had, this school had no college credit plus, but you can see that there under adjustments. This specific school did happen to have a $13 adjustment for fiscal year 16 final number 4, but these are just some examples to show you where these would show up and how you can find your amounts. So we're going to take a few minutes and explain why FTE and foundation revenue changed before we explain the implications of those changes. There's two main reasons why these changes occur. Ohio Revised Code 3314.08 provides the formula by which community schools are funded. The Community Schools Foundation funding is based on the annualized full-time equivalent, or FTE, enrollment of each student. A full-time student is one who attends the entire school day for the entire school year. That will result with the student having an FTE of 1.0. Students who attend a community school for less than the entire year will have an FTE equal to the total hours attended divided by the number of hours in the school year. Community schools enter data concerning the students into EMIS, and the EMIS data populates the School Options Enrollment System, or the SOES system. This is used by ODE to inform public districts about their students who are enrolled in community schools. This encompasses the percentage of time students were enrolled and attending or participating. Based on the reported numbers, ODE calculates and subtracts the appropriate amount of state aid from each traditional school district. The amount subtracted is then paid to the corresponding community school entitled to receive those funds. Community schools are able to continuously update estimated student FTE information in EMIS, but must report the actual FTE information no later than the end of the school year. ODE makes the SCR, or the Student Cross-Reference Report, available to all schools to track enrollment of students on a statewide basis. Using this SCR report, schools have the opportunity to review student data, including student attributes and potential overlaps submitted by it and other schools around the state. The SCR gives schools the opportunity to reconcile student enrollment questions and issues and reduce or eliminate errors that could suspend or impact a school's foundation funding payment. Schools must submit changes in a student's status to ODE. ODE will not fund overlapping student enrollment dates across different schools until the conflict is resolved by the schools. ODE continues to adjust the FTE used for the funding formula as the school updates its information throughout the year. At the close of the school year, ODE will reconcile the final FTE foundation payments and determine whether the school has a corresponding receivable from or payable due to ODE based upon the accumulation of students' FTEs throughout the year. These adjustments are referred to in the remaining slides as the final FTE adjustments. In prior years, ODE has made anywhere from 1 to 5 final FTE adjustments for a year, so these are one reason why FTE and foundation revenue change. Another reason why FTE and foundation revenue change are the FTE reviews. High Revised Code 3314.08 also mandates FTE reviews, which ODE performs to verify the accuracy of the enrollment and attendance data reported by community schools into EMIS. Last year, ODE began using a more robust look-back process regarding the number of FTE students funded in a given school. These reviews can also result in a corresponding receivable or payable due to ODE based on the results. If these results are not appealed, then they are included in the final FTE adjustments mentioned on the last slide. However, when the results are appealed, they are handled through a different process by ODE and show up as a different line item on the foundation settlement. So what schools need to do now? We'll go into greater detail on each of these items on the next several slides. However, as a quick summary, first you need to review all your contracts. Second, create a written policy. Then perform your true-up calculations. Next, you would need to obtain legal counsel opinions and then initiate any repayments that are necessary. Then you would determine the financial statement impact. And finally, you need to make sure you're maintaining a file of support for your auditors. So the first step, reviewing all your contracts. Community schools must review all contracts and agreements to determine if they were paid on a percentage or number of ADM, FTE, students, revenues, anything that changes. Examples of these contracts or agreements could be your sponsor agreements, if you have a management company or operator, those agreements, or if you have vendors where the agreements are based on this, such as maybe an education service provider, online software, or any other vendors you may have that are paid based on a percentage or number of ADM, FTE, students, revenues, or anything else that may change. Although this webinar focuses on percentage of revenue, which is a result of FTEs, all contracts need to be reviewed to determine what criteria are in the agreement and if further action is required. So for such contracts and agreements identified, the community schools should have a written policy and process in place to calculate the true-up amount. So some items to consider for your policy are how often the true-up calculations and payments will occur. Will you do them after, for example, each ODE final FTE adjustment, or will you do them after all of the final adjustments are done? And then again, after, if you have a appeal, if you appealed your FTE review, will you wait and do it again after those appeal results are finalized? Also, another item to consider for your written policy is if the contract is based on number of students, you would need a legal interpretation and definition of such and include that in your policy. Based on any agreements, which components from the foundation settlement are considered in your normal monthly calculation. So if we jump down to slide 19, what I'm referring to there is, you would need to include in your policy, are you calculating your normal monthly payments just on normal state support, the first category, or are you also paying based on additional aid items? Are you also going to consider transfers and adjustments? Or any of the items on here? You just need to include in your policy how your payments are going to be made. And we'll jump back up to slide 18 then. Some other items to consider for your policy. If the same vendor or sponsor or management company is still being used, will the current year payments be calculated net of adjustments or in a true-up calculation at the end? If you have a change in the vendor or sponsor or management company, will the school require full repayment prior to the change? And will the school include a clause in the agreement? Depending on the financial stability of the management company or sponsor or vendor, Will the school require collateralization or other assurances of potential future repayments? So if you flip to the next slide, slide 19, what we're talking about on the first bullet on slide 18 is with the same vendor or sponsor or management company is still being used, will the current year payment be calculated net of adjustments or in a true up at year end? So will you include those adjustments that are there in the fourth category down in your normal monthly payments, or will you wait and do a true up at the end? Step 3, you need to perform your true-up calculations. So for any affected contracts, such calculations will need performed on a case-by-case basis as a result of each contract and community school's individual circumstances. So for these calculations would include, for example, the ODE final FTE adjustments. For fiscal year 16, these were the numbers 1, 2, 3, and 4 that we've been talking about. These include both flags in the system being resolved and adjustments due to FTE reviews when the school did not appeal the results. But if the school did appeal their FTE review results, then these are considered isolated instances and therefore do not run through the normal final FTE adjustment process. There would be an additional adjustment made once the hearing or settlement agreement is finalized. And we'll go over a couple example calculations at the end of this presentation. The fourth step would be to obtain legal opinions. Similar to the calculations, these legal evaluations will need performed on a case-by-case basis as a result of each contract and community school's individual circumstances. You will need a legal opinion on your policy that you create, the calculations you perform, and whether reimbursement is due to the community school. It's very important to note, though, that the legal counsel must be independent of the sponsor, management company, or vendor that the consultation involves. Your fifth step would be to initiate the repayments. So you would need to send bills or sign repayment agreements to the entities affected, whether it be your sponsor, management company, or if you have any vendors. Step 6 would be to determine the financial statement impact. Auditors will be checking for the true-ups beginning with the fiscal year 16 FTE adjustments. So for most community schools, this will be their fiscal year 2017 audit and financial statements. However, for any community school whose fiscal year 16 audit field work is not yet complete, it would be for their fiscal year 16 financial statements and audit. So if you have the 2017 financial statements you'd be looking at, if your 2016 audit is already done, you would have to look at your 2017 financial statements from two different perspectives. First, you would need to look at the fiscal year 2016 FTE adjustments. The final FTE adjustment number 4 for fiscal year 16 was included on the June 2017 payment, and this was the last normal FTE adjustment. But reminder, if a community school had an FTE review and they appealed their results, some of those hearings and amounts may not yet be finalized. So for the fiscal year 16 FTE adjustments, their effect on 2017 financial statements, you would need to determine if a receivable or payable needs booked, if the net position at the beginning of the year needs restated. You would need to determine if repayment plans need disclosed in your footnotes. And if you did appeal and it's not settled yet, you would need to determine if disclosure is needed, including a disclosure on the potential repayments due to or from your sponsor, management company, or vendor. The other piece affecting your fiscal year 17 financial statements would be the fiscal year 17 FTE reviews. Adjustment number 1 occurred last week for fiscal year 17, and you saw that on your foundation settlement. Adjustment number 2 is planned for December, and currently these are the only 2 FTE adjustments the ODE has planned for fiscal year 17 for community schools. You would need to determine if the Community School Foundation contingency footnote should be included, including an appeal if applicable, and if it should be expanded to include potential repayments due from or to the sponsor, management company, or vendor. If your audit fieldwork is not yet complete on your fiscal year 16 financial statements, then for your fiscal year 16 FTE adjustments, you would determine if a receivable or payable needs booked, determine if a repayment plan needs disclosed in the footnotes, and if the school appealed their FTE review and has not settled yet, you would need to determine if disclosure is needed, including disclosure on potential repayment due to or from the sponsor, management company, or vendor. And finally, you would need to maintain a file of all this support for your auditors. Auditors will review the school's calculations and assess if reasonable conclusion was reached. Schools must maintain a file including a listing of all contracts and agreements and indicate if they are paid on a percentage or number of ADM, FTE, students, revenues, or anything else that changes. Copies of all affected agreements, noting the pages which include the payment provisions. You would also need to include for your auditors your written policy detailing the process in place to calculate and receive or pay the true-up amount. You would need a calculation of each true-up amount and support for such included in your auditor's file. Also, the consultations with legal counsel that we discussed a few slides earlier, you need to make sure you maintain for your auditors. And then finally, a schedule of your any repayment plans and the agreements if they were not paid in full. So I want to go over a few other important pieces of information related to these calculations before we jump into the example calculations. Findings for recovery, or FFRs, are covered in Ohio Revised Code 117.28. This section authorizes the auditor of state to report a finding for recovery in audit reports when legal action may be appropriate to recover public money or property. So auditors will likely issue findings for recovery when the true-up calculations or evaluations have not been performed and the auditor determines an amount is due, or they would issue an FFR if an unreasonable legal evaluation or determination has been relied on, or they'd issue an FFR, they would likely issue an FFR if the amount due has not been repaid or is not in the process of being repaid under the terms of a reasonable and enforceable repayment agreement. The reasonableness of an agreement will turn on many factors, and depending on the financial stability of the management company, sponsor, vendor, whichever entity is involved, it may require collateralization or other assurances of future payments. Only overpayments to community schools are being covered in this presentation, meaning money due back to ODE from the school and therefore money due back to the school from any related sponsors, vendors, or management companies. However, if a school had a final FTE adjustment from ODE that resulted in a positive amount, meaning additional money due to the community school from ODE, they should also perform a true-up calculation and payment to their sponsor, vendor, or management company. The Auditor of State's Office does not issue reverse findings for recovery, and therefore no findings for recovery would be issued in these cases in the community school's audit report in favor of the sponsor, vendor, or management company. However, in cases where the other party is a governmental entity, such as where the ESC is the sponsor of a community school, the ESC's auditors would consider if a finding for recovery should be made on the ESC's audit. Another important item we wanted to point out is with regards to closed community schools. So occasionally a school receives a payment in July or August for foundation when they were not eligible to receive that payment. This could occur if they failed to obtain the minimum number of students, or if they were planning to open but didn't for one reason or another. Often in these cases, ODE requires 100% of these funds to be repaid to ODE. In these cases, for any contracts or agreements paid on a percentage or number of ADM, FTE, students, revenues, etc., the community school must assess their contracts and make a determination whether such payments made are due back to the community school. If the contract is based on a percentage of revenues, it is likely considered due back to the community school because in effect, no revenues were considered received in these cases. On a similar note, Occasionally, schools close and still owe money to ODE. This could occur for reasons such as final FTE adjustments from the prior or current year, or FTE review hearing and settlement agreements from a prior or current year. Occasionally, the foundation settlement or final FTE adjustment report may appear that the community school received some funds, but ODE actually did not remit those funds to the school. ODE withholds funds occasionally because they know the school is going to be closing and the school still owes them money. So for closed schools, be sure to evaluate whether the school actually received all amounts showing on the foundation settlement and the final FTE adjustment reports when performing these true-up calculations. To do this, you could check the bank statements to see the actual amount that they received to see if it agrees to the settlement report. In situations where a community school closes and still owes ODE money from overfunding, a finding for recovery will be issued. So now we're going to go through some example true-up calculations. I just want to emphasize, though, that these are just examples. The factors considered in each of these school calculations would be based on their own policy discussed earlier and the specific terms of their agreements. We are in no way saying that these are the percentages that should be charged or are the norm. We are also not saying that the foundation settlement line items in these examples are those that should be used. Again, these are just examples. So we're going to start with, we'll call it School A. Let's say School A had both positive and negative final FTE adjustments. So there's numbers 1, 2, 3, and 4 for fiscal year 16 adjustments. They varied between, some of them were positive, some of them were negative. Let's say the school also had a clawback due to ODE FTE review or appeal. School A also had a management company contract, a sponsor contract, and a software vendor contract, all based on a percentage of revenue. So this school, in this example, let's say that they paid on total state support received and additional aid items. So in this example, it would be $1,007,000. And let's say this school had a management company agreement that called for 3% of that to be paid. So that means that school would have paid $30,210. However, this school, let's say they had a FTE adjustment number 1 of positive $6,000, number 2 of negative $1,000, FTE adjustment number 3 of a positive $3,000, and no FTE adjustment number 4 for fiscal year 16. This school also, let's say, had a FTE review that they appealed, and that final decision came out to be a negative $40,000. That means that this management company should have actually only been paid on $975,000. When you multiply that by the 3% in their agreement, they should have only received $29,250, which means $960 needs repaid, or it would be an FFR. School A also, as you remember, had a sponsor, and that sponsor's agreement let's say it called for 3% to be paid of the total state support received plus additional aid items. So this calculation is the exact same as the management company calculation. So this sponsor would also need to repay this school $960, or there would be an FFR issued. And finally, School A also had a software vendor that called for 5% to be paid to them. So taking the calculation the same, just multiplying it by 5%, the school actually paid over $50,000 when they should have only paid $48,750 to their software vendor, with an overpayment of $1,600. So when you add the amounts together that this school overpaid to these 3 entities, they overpaid $3,520 in total that would need recouped, otherwise FFRs would be issued. So another example, let's take School B. This school, let's say, only had negative adjustments. All of their FTE adjustments were either 0 or were negative. They had no clawback due to an ODE FTE review or appeal. School B, let's say, had no management company and no vendor contracts that were based on revenue, students, FTE, ADM, or anything else that changed, but they did have a sponsor contract that was based on the percentage of revenue. So again, let's say this school chose to pay on their policy said they were going to pay on total state support received and additional aid items. In this school's example, it would be $5,035,000. In this example, let's say the sponsor agreement called for 2% to be paid to them, which means the school would have paid them $100,700. However, with the FTE adjustments this school had, they had a negative $60,000, negative $50,000, negative $20,000 FTE adjustments, and let's say they had no adjustment for number 4. They should have only been paid on $4,905,000. Times the 2%, they should have only got $98,100, resulting in an overpayment to the sponsor of $2,600 that would need recouped by the school, otherwise an FFR would be issued. So I'm going to turn it back over to Bob now, and we're going to go through any questions, some of the questions we got in.
Okay, thank you, Kelly. The first question, my audit is contracted out to a CPA firm. Will they receive similar training on how to calculate these findings, and will they be doing some of the same work?
Yes, we will be giving a similar training to the auditor estate staff and the IPAs that we contract audits out to, and that will be happening very soon. We don't have an exact date set, though.
Okay, thank you. What will happen if we do not have a policy in place by the time of our audit? My 2017 audit has already started and is expected to be completed soon. Will the finding for recovery process begin now, or will we be given time to develop a policy? Will the audit completion be delayed until we have the time to develop the policy? So several questions in there. So what will happen if we don't have a policy in place by the time of our audit?
So as we discussed back on slide 23, for any community school whose fiscal year 16 audit fieldwork is not yet complete, this would be effective for their fiscal year 16 audit and financial statements. But for most community schools, this will impact their fiscal year 17 audit and financial statements. But regardless, it will begin with the fiscal year 16 FTE adjustments, whichever audit period, if that's the 16 or 17.
Yeah. So our audits are going to move forward, and we're going to be issuing, if the overpayment has not been addressed, even though there may be some timing issues, we're going to move forward, complete audits, and issue findings for recovery when that's determined necessary. Okay, our next question, Kelly. If we state in our policy the true-up will not be completed until ODE has completed all FTE adjustments, will the auditor state abide by that time frame, or will we be expected to perform interim calculations on each adjustment? Will we truly be able to wait until ODE has finished the adjustment process for the year in question?
Yes, auditors will audit according to your policy as long as it is reasonable. Specific to this question, though, if your policy states you will true up once all FTE adjustments are complete at the end, then the auditor state will audit accordingly.
Okay, thank you. Next question. We report on the GAAP basis of accounting. Our financial statements are required to be filed near the end of November. How am I expected to report a receivable or payable on my financial statements when ODE is still in the process of performing the look back? The final adjustment for 2016 did not take place until June 2017.
Clients are required to use the best information available at the time they prepare and file their financial statements.
So Kelly, if you don't mind, I will expand on that just a little bit. In the role of a preparer, just in this case, just like in all other cases, that information that's available for the preparer at the time they file their financial statements is what should be used. And so that's what we're gonna anticipate that preparers will do on these adjustments. Okay, moving on to the next question. If during the audit, the auditors determine an audit adjustment is required to book a receivable or payable because of the FTE adjustments, will I receive a report comment in my schedule of findings? A very good question.
It's not automatically an internal control audit comment if we make an audit adjustment. It depends on the situation and on the nature of the adjustment to determine if a comment should be issued. If a policy is adopted and a reasonable assessment is utilized by the school, auditors will evaluate to determine if a comment should be made. Auditors don't issue internal control audit comments for information that was not available at the time the clients prepared and filed their financial statements. They will assess to determine if an audit adjustment is required, but no corresponding audit comment would be made if the information was not available to you at the time you were preparing and filing your report. Auditors may still issue a finding for recovery, even if there is no internal control comment, if the situation warrants, though.
Okay. Okay. Our next question. FTE adjustments are not new. Will we need to go back to previous years to true them up as well?
As we discussed on slide 23, auditors will check for the true-ups beginning with the fiscal year 16 FTE adjustments.
And that will be the case either in the FY16 audit or in the FY17 audit.
Correct.
Okay, our next question is maintaining an accounting of the over and underpayments as a financial statement item, accounts receivable or an accounts payable, sufficient, or do attempts to actually recover the monies need to be made immediately? Is it permissible for a community school to write off these accounts receivable in future years if they so choose? And the write-off that they're asking about here, Kelly, would be the actual true-up calculation, and in this case it would be an overpayment to either a sponsor, a management company, or a vendor.
This would not be permissible. On slide 29, we stated that FFRs will likely be issued when the amount due has not been repaid or is not in the process of being repaid.
Okay. Our next question. In the case of a funding for recovery in which ODE overpaid a community school, who in turn overpaid a vendor, how does the flow of the money go? Does the community school need to recoup that money and then send a check to ODE? Does ODE automatically take it back from the community school by reducing future foundation amounts? And is it then the community school's job to recover it? Also, where does the money go once ODE gets it? Do they return it to the public school districts? There's legislation currently under consideration that will mandate ODE to return enrollment-related FFRs to the resident school district. Okay, so again, several portions to this question. So Kelly, why don't we start with the issue of an overpayment to a community school by ODE, and then the issue of a potential overpayment of a sponsor or management company based on that overpayment that occurred to the community school.
Okay, and so there really are two separate issues here. As Bob mentioned, the first one is the ODE over or underpayment. That is between ODE and the school. The second issue would be the school over or underpayment to the sponsor or vendor or management company. These are the transactions that auditors will audit and determine if they are handled in accordance with the school's policy and, if appropriate, if action was taken.
Yeah, so then I will address some of the other comments in there. Where does the money go once ODE gets it? Again, that's out of our control from the state auditor's office. That is a decision that that's made, a policy decision by ODE. And as far as do they return it to the public school districts? Again, the questioner is correct that there's some legislation currently under consideration. Again, that's not in the control of the Auditor of State's office to determine what's going to happen with that legislation. Okay, our next question: when are the final adjustments done for each fiscal year, and is there a time frame when schools can expect to see the final adjustments?
So schools would need to ask ODE for an official answer on this. The timing and number of final FTE adjustments varies each year. For fiscal year 17, as I mentioned on one of the slides, there are 2 that were planned for community schools. The one you just got last week, and then another FTE adjustment in December. For fiscal year 16, as we've been talking about in this presentation, the FTE adjustments, there were 4 of them, and the last one occurred in June 2017. Going back to fiscal year 15 FTE adjustments, there were 5, and the last one occurred on the March 2017 payment. And then you have those that appealed and run outside the normal FTE adjustment process. Those are handled on an individual basis, and each hearing or settlement timing can vary.
Okay, thank you, Kelly. And then our next question, if appealed, is the amount due resulting from the final decision pushed through the foundation payments, or does the district have to issue a check payment to ODE?
So this is another issue that's between the school and ODE. To my knowledge, they all go through the foundation payments over the number of months noted in the settlement agreement or hearing. If a school has closed, however, a check or EFT would need issued, as there would be no more foundation payments to deduct it from.
Okay. And we have just a couple other questions. Do districts typically choose the amount of months in a settlement or in a repayment in the repayment process with ODE?
ODE determines the repayment period based upon length of the sponsor contract and how much is remaining in it.
Yeah, and typically that's what we've seen. I think also there could be in the process of settlement, again, that would be something that would be between ODE and the school that they are talking with. And then our next question, please differentiate between a full-time student who attends an e-school versus brick and mortar, versus a brick and mortar school. Brick and mortar schools are not funded on an attendance basis per the FTE review manual, and they're referring to our discussion from slide 10.
Non-classroom participation must be evidenced for both e-schools and the online portion of any blended learning brick and mortar school where participation takes place outside of the classroom or school facility. Also, FTE adjustments as part of the normal year-end reconciliation or true-up process at year-end can still impact a brick and mortar school, even when all instruction is provided in the classroom.
Okay, thank you, Kelly. And I think we have one more, and I'm having a hard time seeing it. Is it the one that's in the chat box right now?
So I did have, you want me to read it out loud?
Please.
So mine is an FFR avoided by proof of an attempt to collect the funds owed, or does it have to be collected? What if the attempt was made but never collected, even after a year or two?
Lack of collection, again, I think in each of these cases, the facts are going to be different, and we're going to need to take a look at that and evaluate it. But I would say lack of a collection often would result in a finding for recovery continued to move forward and be issued. Subsequent to the issuance of a finding for recovery, there is a collection process either through a local prosecutor or the Attorney General's office. And that would be at that point where that would be assessed whether that finding would be resolved or not at that level. Okay, a few more questions. Why is a repayment needed if there is an adequate provision, if there are adequate provisions in the management agreement or sponsor agreement provided for the true up and repayment?
If they have a reasonable enforceable agreement for repayment, we will accept it and treat the matter as resolved.
Yeah, so again, in some of these cases, a repayment may occur just through the normal course. And again, we're going to take a look at those issues as auditors and evaluate them, and so that we can make a determination of whether a finding should be issued. Okay, our next question: what is a clawback?
A clawback is the amount of money ODE determined is owed following an FTE review.
Yeah, so it's just a term of, I guess, a term that we have used as we've walked through this for a number of months. The next question: will the written policy be required through the Ohio Revised Code?
No, that's not a requirement in the Ohio Revised Code.
It's certainly a good practice and to have that policy in place. Okay, what if the school has deficit protection and the management company has waived the money owed to them by the school?
If there's an arrangement under which there is a repayment, or if there's a reduction in compensation to cover the amount due, that resolves the matter.
Okay. Okay, well, we want to thank everybody for their participation this afternoon. If your question was not answered through this session, look for both this webinar and the questions and answers document to be posted to our webpage on our home webpage at www.ohioauditor.gov in the very near future. We want to thank all of you for joining us this afternoon, and we hope that this information has been helpful for all of you as you perform your jobs and do your work with public entities in the state of Ohio. Thank you.